In mid-August, famed investor Michael Burry attracted investors' attention when his Scion asset management firm disclosed a substantial purchase of 600,000 shares in Geo Group, with an overall value of around $4.2 million. Following this revelation, Geo stock has surged by nearly 18%, further fueled by a bullish report from Citron Research. The company may be in a position to extend its recent gains after the U.S. House Committee on Appropriations passed a major bill to resolve the migrant crisis. So what happened? Well, in a bid to address the migrant crisis, the House passed a $92 billion bill that requires every non-detained alien to use a mandatory GPS tracking system. The bill states, quote, ensure that every alien on the non-detained docket is enrolled in the Alternative to Detention program with mandatory GPS monitoring throughout the duration of all applicable immigration proceedings, including appeals, and until removal if ordered. 87% of this market is controlled by the Geo Group, according to Citron Research. Geo Group is a company specializing in private prisons and mental health facilities. 5 million aliens match this description in 2022, with that figure very likely being significantly higher this year, the firm added. Short-selling specialist Citron Research stated a few weeks ago that it anticipated Geo was positioned well. The reason? Basically, Citron cited the flood of immigration into the US from abroad. As a result, the private sector firm can offer alternatives to traditional detention centers for migrants. In turn, Citron believes this could prove to be major bullish news for Geo Group investors. They tweeted, quote, Geo Group is poised to benefit from the current migrant challenges, given its leadership in the alternative to detention sector. Smart linked solutions for eligible migrants are humane and economically viable. $180 a day to detain and $8 a day to monitor. Expect enrollment to boom to 500K in the next 18 months. That week, Citron Research released their bullish report with a price target of $13, which at the time represented about a 62% gain. They went on in their report to say, Geo Group can hit all-time highs from the House's Homeland Security budget, even if not passed. Everyone is discussing the migrant problem. One public company is part of the migrant solution. While Geo Group is most known as the private prison company, it is less known for its higher revenue/margin and faster growing technology division that holds a 90% dominant position in the alternative to detention market. The stock has been punished over the recent years as a victim of ESG investing, while the underlying business has been thriving. But now everything has changed. Last Friday, the House passed H.R. 4367, the Department of Homeland Security Appropriations bill that stated, ensure that every alien on the non-detained docket is enrolled into the Alternative to Detention program with mandatory GPS monitoring. If that were to be passed and funded as written, Geo stock could skyrocket as the number of participants would balloon from 180K to over 4 million. More importantly, days on program would increase as the House recommends the importance of duration. So what to expect from this? Well, the extremity of the House bill shows that ATD is gaining mindshare in policy circles and being viewed as a cornerstone of future migrant policy. The House has finally caught on to what is known by other agencies, and this is not a novel thought, as earlier this year, Solicitor General Elizabeth Prelogal argued, we've also asked for funding for alternatives to detention, which would help us supervise a greater number of people and ensure that they're not absconding and ensure that they appear for their hearings. ICE spokesperson Mike Alvarez said the agency's alternative to detention program, which is mostly SmartLink, increases court appearance rates, compliance with release conditions, and helps the participants meet their basic needs and understand their immigration obligations. And as for competition, Citron Research states that there is none. The detention business has been thriving with record profits in 2023. Geo has made it clear that they will wait out this administration before they decide what to do with some dormant facilities. Getting a prison zoned, funded, and constructed is no easy feat, and these days every municipality seems to go over budget, with the price of labor, concrete, and other materials continuing to go higher. Recently, Alabama was spending over $250,000 a bed. The average cost of a new prison seems to be in the $150 to $200K range. Geo has the ability to either sell the facilities to pay down debt or wait until the government will pay a premium for the facilities. Either way, the replacement value alone of the 45K beds they own is worth the current market cap of the company at only $65K a bed. An interesting piece was recently published on Seeking Alpha that does a thorough job explaining debt and earnings tables and places a $24 TGT on Geo. This was before the House bill. Citron believes that Geo is the perfect stock to own for this environment. It is trading at a historically low multiple, whose business is in the two most durable and growing industries, crime and immigration. The monitoring software component operates a 48% gross margin and can easily scale. Even a compromise on DHS funding can, quote, take the stock to all-time highs. Burry first acquired Geo in Q4 2020. However, the stock witnessed a sluggish performance in 2023, declining more than 33% since January 1st, only to rise to nearly $8, making the stock up 6.3% on the year as of recording this video. While Burry's $4 million investment in Geo seems significant, it takes only 2% of his portfolio. More on that later. Following the close on September 29th, Geo stock ranked among the top highlights in bar chart screener for unusual options volume. Specifically, volume hit 18,000 contracts against an open interest reading of 120,000. Further, the delta between the Friday session volume and the trailing 1-month average metric came out to 400%. Transactionally, call volume reached 16,000 contracts against put volume of only 1,600. On paper, this pairing yields a diminutive put-call ratio of only 0.1, implying bullish sentiment. Also, bar charts point out that the put-call option interest ratio is only 0.77, further supporting the optimistic tilt. It's not a surefire forecast, but if the Geo stock continues to move higher, thanks to prominent investors like Michael Burry investing in it and other catalysts, a panic could set in. In deciphering the big block trades, it may be that the bulls have the slight edge. Geo Group is, quote, a diversified government service provider. The company is specialized in designing, financing, development, and support services for secure facilities, processing centers, and community re-entry centers in the United States, Australia, South Africa, and the United Kingdom. The company operates through 4 segments: U.S. Security Services segment, Electronic Monitoring and Supervision, Re-entry Services, and International Services. Specifically, prison stocks are the stocks by companies that own and operate private prisons and jail detention facilities in the United States. This system works by the U.S. government signing contracts with these private companies that own properties and provide prison management facilities there. Geo Group is easily one of the most controversial companies available for trading. Geo Group represents a private prison, but officially, the company utilizes more clinical language, billing itself as a government service provider for the development of secure facilities and processing centers. Human rights advocacy groups have consistently identified Geo stock as a problematic investment. In the wake of the bill's approval, Geo shares could jump as high as $25, Citron said, which is thrice its current share price. At press time, Geo was changing hands at $8.57, up 4.5% at the October 2nd market open. Just in the past week or so, the stock has added $160 million in market cap. For the past 3 months, the stock has been rising steadily. Meanwhile, Michael Burry's largest positions at the moment include 60% ETF shorts, which are designed for investors who want to profit from declines in indices without actually short selling individual stocks. At the same time, 10% of his portfolio is allocated to Expedia Group and Charter Communications. Other noteworthy positions include Cigna Corp, Vital Energy, and CVS Health Group, among others.